So this will be the structure of our conversation. We look at what happened in 2025. We look at the wins and positive. We look at the top gainers. We look at the negative challenges, and then we look at the lessons, right? And the last, we look at the risks and opportunity, which are very important. So we look at what happened so far in this year, and then we look at key things that we can learn from it. Look at the opportunity in the next coming year, and then begin to double down on it. So let's move right into it. So basically, what happened in 2025? The summary of what happened in 2025 for me, I will put it into the fact that you have to know that in the financial market, right? Two key things in the financial market that you have to know is that things doesn't just move anyhow, right? There is a bit of demand and there is a bit of supply. So in the aspect of the supply in the financial market, what I mean is that the money aspect, right? There are quite a lot of money that is going on in the financial system, but it does not get out of the system. It doesn't isolate themselves. People begin to move money from people begin to move money from one particular sector to another sector. So let me give a typical example. This year, kind of, a typical example is that this year, sort of, people begin to move money from equity and then begin to move it into stuffs like gold, like silver. Another thing that happened is that people that were so much invested in commodity like oil begin to move their money away from crude oil and then begin to move their money to maybe equity and other stuff like that. So what does that mean is that um, money does not isolate. It just look for where there is a bit of the demand and then put itself into that. So investors do not necessarily just stay in one place. People that you are seeing that are investing in equity at a point they just move their money out of equity and then put their money into something else. So you could see people say, "Oh, a particular investment has crashed." What it means that people are taking away their money from that particular thing. There is no such demand in it again, and then put in other stuffs, right? So think about it that way. When next time you see hear people say that there's a crash somewhere, don't forget that if there's a crash somewhere, there's another demand that people are putting more their money into. And when you already stayed invested in that particular kind of thing, and then the demand shifts to you, that's where you gain the most, to be honest. For example, people that gained so much on silver this year, silver has done about 140% this year. People that gained so much on silver this year are not people that came into silver just this year, are more like people that already invested in silver even before now. So the whole growth just happened because they were there. And most people that are moving to it did not do so much in quote. For another example I could use is gold. When gold started his movement this year, I think I invested when it was around I've forgotten the exact price, but gold has done like 64%, right? And I invested when it was my own return to now will be around 50 something percent. So it might be early, but it's not as early as someone that has invested in it maybe probably a year before or thereabout, right? So the first thing that I want to talk about is things that happen. So like I mentioned in what we have as the structure, things that happen this year. First, there's a bit of confidence in the market. When I mean bit of confidence, I mean people are kind of more relaxed. Okay, let's try what stock investment is. Majorly, the drivers of this investment, especially in the Nigerian market, are more about people, general individuals, etc. Because we now have fintechs that give people opportunity to invest in the stock market. So you have the likes of Bamboo, the likes of Carrywise that invest and other stuff. So people can use all this fintech and then invest in stock. Not like before that is a bit manual work and a bit complicated. But now because there is a lot of retail participation and fintech adoption, it makes it very easy for the market. And the good part of this particular thing that happened is the fact that we now have more people that have a bit of level of faith in the market. People have heard a lot in the past because they have heard a lot in the past. There's this fear in people's mind that, oh, you have this person, your uncle that invested in one particular equity or made an investment and things did not go well, kind of. So what do happen is that when crash happened, or maybe there's a stock market crash or something, and people begin to withdraw for it, right? Because of that crash, maybe they got in quote burnt in that crash and they withdraw from it, it affect the market for so long because there is no inflow. What makes the market is the liquidity that is going on in the market. It's just like any typical market. If you go to a market, maybe they are selling stuffs. What make it really market is the fact that there's liquidity that is going on in it, and that's the same thing with the financial market. So we are glad, kind of what happened this year. There is a lot of participation from general people, like everybody really want to participate in the stock market, which is good. The second part of things that happened this year that is quite interesting is our foreign portfolio influx. You know that every country, what makes the economy of every country really great is the fact that you create an opportunity or an environment for them to be like influx of foreign currency into your country. So that means there will be a bit of demand in your currency and people want to do stuff with you, right? If you look at today, the country with the highest foreign portfolio influx is USA because everybody wants to buy stocks in that country. And that's something that happened to Nigerian market too this year, right? There are a lot of influx. People really want to invest in Nigerian market based on the fact that our return is double digits, kind of. And this year, the Nigerian market has done maybe about 40% here, about the US market has done about 18%. So if you look at those two things, you see that there's huge opportunity for us in Nigeria than the US market. The problem that always happen is the fact that currency exchange, and there is a bit of stability in the currency this year, which is good for us. Um, because now there is a bit of stability. It's not before that you have about $300 to a 300 naira to a dollar, and then you see another maybe in 1 month or 2 months it goes to like $500 per 500 naira per dollar. But now there's a bit of stability, at least as for this year, there's a bit of stability. So because of that, there's a lot of inflows that came in. People want to invest in Nigerian stocks. So look at it in this way that there is no difference in currency. You brought in, let's say $1 million, right, at a rate of 1,500, and you are taking it out at a rate of let's say 1,480 or thereabout, right? So it doesn't make sense to people that invest because if you have double digits on your investment on that $1 million, is like a lot of money. Giving out a little would not really be an issue. And most people that brought in income, like not income, that brought in capital importation, they were majorly around our investment assets. So there are quite a lot of reasons why people bring in foreign currency. That's what we call capital importation. One, it will be like portfolio investment. The other will be like more like foreign direct investment. So let's think about it like you want to invest in a startup, you want to invest in a company, specific company. I don't mean public company, or you want to do other stuffs, right? So that's foreign, and sometimes it might be loan, right? To get like foreign loan to be able to do stuffs. But majorly this year, what drove the capital importation were mainly because people want to invest in equity, money markets, and other stuffs. Right? More like 90% of it was coming towards that. So which is good for us. It means that people on the other side of our country believe so much in our economy. And if people on the other side of the country believe so much in the economy, create opportunity for our local investors to be like, oh, there's something that is happening here, maybe I want to be part of it, right? Which is really good. That happened this year is precious metal. I think this for me is like the biggest thing that happened this year because it's not something I was envisioning that will happen, especially for silver. Until now, it's something that I feel like, it's kind of painful because I know when silver was at certain point, right? Probably I know when it was at 50% up. I'm like, okay, I'm not so sure anything will happen here. Then it went to like 100%, which I also was aware. I'm like, okay, it's already 100%. Then it went to 140%, which is currently at almost 150%. So it's just how it is, right? And the reason why precious metal went up is because of uncertainty. And which is another thing we'll talk about when we go into things you have to look out for 2026. One of the reasons why silver went really extremely well this year is just uncertainty. There are other stuff to it, and we did it in one of our videos and posted it, which you can check out. But uncertainty really moved precious metal. But one of the commodity that suffered this year, which we also talk about later, is crude oil. Crude oil suffered this year. Crude oil has been down about maybe 30% or 40% down, which is not so really good. And there are reasons around it, which is also things I want to mention for next year. If you have eye for commodity, it's something you want to put your investment into. Oil. The other reason where people talk about EV versus buying in crude oil, natural gas, there is that concern there. But the fact that it has been the lowest, imagine a country like a place like Dubai or other stuffs, even though they are investing in EV, these people, we know they are Arab country in quote, and do so much with oil. So what it means is that they will definitely control the demand and the supply of oil at a point. It's almost like at the bottom pricing. If you look at oil as of today, oil is almost at the bottom pricing. It's around 56 or thereabout, which is quite low. If you look at 22 years duration, it's almost close to the lowest pricing of oil, which is crazy. So what it means is that as much as there is supply, if you have people that control the supply, they just adjust it a bit so that there's much more demand that is coming for it, which I think will happen. When will it happen? Nobody knows, but I think it will definitely happen. So what worked this year is diversification. One thing that works so well this year is diversification. The fact that you don't just put your money into one particular asset or one particular sector, it's one thing that broke out. So for example, someone that invested in, let's just say, US stock market in quote, S&P 500 or such, would have gained about 18%. Someone that invests in the Nigerian market with the US market would have gained much more. Someone that invests in precious metal, let's say like gold or silver and other stuff, would have even gained much more. So what it means is that diversification really helped. At a point during this year, equity suffered a lot. Like there was a point during this year that is equity, like for US market it was April, for Nigerian market it was around, I think, November-ish kind of. So at that point, when you diversify into other stuff, even if it's real estate, even in other stuffs, it's just help you. So I think diversification work. And things that surprised for me, that was a bit surprising, and maybe for everybody, is the agricultural sector. They did really well this year. Maybe because of the bounce back, because of the whole post-COVID issue. Now they are getting better earnings. You see the likes of Presco doing really well, and other stuff, right? Another one is consumer goods. The likes of Dangote. Dangote maybe not so much this year, but I believe Dangote is going to do really well next year, which is part of things that I wanted to mention, or I will mention towards the end. Dangote is one of those companies that we are looking forward to, that's going to do so well next year, for the fact that you also want to pay dividend in dollar, which is sweet. Anyways, we have Honey Flower Mill that did really well this year, Vital Foam and etc. Also, I mentioned it. Another thing that surprised me, you hear me mention silver a lot this year. Why? Because I did not buy it, and it's painful. And two, because I mean, it's silver, it did well. But one, because I did not buy it, so I have to keep mentioning it so I remind myself why. Right. So that's aside. So what approach got rewarded? Staying invested. Right. This is super important. Staying invested. For most people, I've had people that will say, Muiwa, I will just wait for the market, and when everything is low, I will buy it. When everything goes up, I will sell it. I'm like, I like your strategy. It makes sense theoretically, but it doesn't work like that in the market. The market does not respect anybody. It doesn't even care about you, because the market does not know anybody at the end. And which is the most painful part, is that even if you have billions of dollars in the market or naira, the market does not know you. It can go up, it can come down, it can crash the person, and it can help the person also. So you saying that you wait till the market comes down, you buy it, and when it goes up, you cannot know. It's not something that you can time. All right. So staying invested really helps your discipline. And I think another thing you have to take to next year, that's one thing you have to take to next year, is staying invested. Put your money into the investment and ensure that you just keep adding to it. So there's something we call cost averaging. It's the fact that you can buy goods every month, right? Or so when we put it into stock, is that you can buy a particular stock every month. yeah, just buy it every month, and after a while you just see you compound. And I think it's something that happened that helped this year. For example, if you have purchased a particular stock January, February, it was January was really good market, February was good market. By March things were beginning to look dicey and went down. By April everything burst out, right? Things go really down by April. So what it means is that someone that just sold out of it by April and be like, oh, there is fear of the market. Someone else is just buying. So he bought it January, bought it February, bought it March, bought it April when things went down, right? So your cost average at that point would have reduced because you bought it at low. By the time everything goes up back, you will make much more money than someone that just did not buy again or just bought it January and left it there. So which is another idea. Remember cost average. You can buy it every month, set it up. Most of the platform that I talked about can give you opportunity for you to buy it every month. You can put like 100,000, 50,000, 20,000, 10,000 or whatsoever. Just be consistent on it and you really make more money. So wanted to just put this out so you could see things that the good part of what happened is stocks that really did well. For me, I think one, gold, right? Out of commodities, so I brought out two commodities that really did well. That's silver. Like I said, I will mention that guy again, silver. All right, silver and then gold. Those are the two commodities that did well. But when you look at the stock market, there's NCR, there's Beta Glass, Ella Lakes, Vitafoam, Presco, Viso. These are Nigerian market. They really did well. Going to the next year, there are other things that I think will be something to look into. So I will share it towards the end of it, things that I feel you should look into for the following year. And in the US market, there are quite a lot of stuffs too that did really well this year. One of it that really is Micron. Another thing that the common company that you know that really did well this year is Google. Google did about 60 something percent, maybe 68% or thereabouts, or maybe even more, for people that bought it. And the interesting thing about Google performance is that not until the mid of this year, that's when Google begin to show results. I mean, the performance wise, and the reason is because AI, and which we will talk about in the next few slides. The reason because AI, we have gotten to a point in the AI investment such that people are not so much interested in the fact that you are building an AI infrastructure. Rather, they are interested in what company is already building AI infrastructure and they are already making money from it. Right? Those are companies that people want to invest in now. Not just the fact that you know that you are building AI infrastructure. I mean, nobody cares again at this point. So the negative things and the challenges that happen. So many companies failed to, like I mentioned, failed to deliver earning growth as expected, right? And which is the last statement I mentioned, that people are not so much interested in the fact that this company is an AI company. What they are not interested in is this company that is an AI company, is the revenue that they are bringing out as a company. Is it great? Is it at a really interesting rate? So far you see that I didn't talk so much about Nvidia. Nvidia is a good company. To date, Nvidia is a company that someone needs to keep an eye on. But it's just that a lot of the revenue growth that Nvidia will have in the next 5 years has already been priced in the stock market, right? The amount the Nvidia is trading today, everything that the Nvidia is going to make, they've already priced it in. So it's already expensive to buy Nvidia at this point. Only if Nvidia then bring out like any growth that is way beyond what people are expecting, then it might make sense, right? But I will just explain other ones that we can look into. The next thing is what hurt people this year. I still think that this CGT, that's capital gain tax. I know November we talked about it a bit. CGT is something that even till now a lot of people do not understand, right? And personally for me, I feel until it play out, that's when you'll be able to get the real solidification about it, right? There are a lot of speculation. This person will say his own, that person will say his own. The loudest, as we know, is the loudest voice that people take so important. But yeah, there are some clarification that they are doing on the tax reform so that people know it more. I you just go and like check it from the source, especially the chairman of the reform. You'll be able to get much more value out of it, right? But it happened that this year, CGT is one thing that drove the market crazy at a point. Everybody began to sell out because they feel like if you are making money and then you try to sell your stocks, the government is going to take a percentage next year. So everybody just want to clear out their money this year, which is not totally true. That's not how it works. It's a better structure that if you understand, you get to know. Um, Another thing is technology concentration. I think that's another thing that hurts people this year. So what does technology concentration means that most people are invested in the likes of Nvidia, the likes of Apple and the likes, right? But being invested in those things because they're already pricing, gradually you are not going to do so well again, especially this coming year. People that invest in a big company are not going to do so well this coming year because they're already pricing. We already look at them and price them in. So if even they are going to do it, maybe just one or two of them is going to do really well. So you just have to be careful of that. And then the third thing I wanted to mention is assumption. So there was an assumption that happened early this year is the fact that our inflation, which is almost 30 by the beginning of the year, is that by mid-year is going to be about 15%. But up to now, it's not even close to 15% anyways. But so that also assumption affect people because you were thinking that if you are able to make like 40% return and inflation is around 15%, you still like you still got like a lot of money that way. And that's another reason why people used to invest in US stock market because the inflation there is very minute and you can get more money. But if people want to invest in the Nigerian market and inflation is high, which is kind of good because once the inflation is high, no, not good. But anyways, you get what I mean now. It's not good, but there's what I'm trying to say. If the inflation rate is high, interest rates on our local markets, maybe money market will be higher. So people that are bringing money from the outside, they want to invest in all our local markets. For example, the beginning of the year, Treasury bill was around 22%. And Treasury bill, like you know, is one of the safest investment instruments as of today, or as of maybe forever, but as of today, yeah, right. So and it was around 22%. Even the US market in the old equity market yet they did about 80%. So which means that our safest instrument has much more return than their most risky instrument. I don't know if it does make sense. So it's much better to bring money into it, which is the reason why we have foreign investment. But what then happen is that why we want lower inflation, our interest rate will also reduce. So there will not be so much influx in that regard again. So that's why I say it's good, but it's tricky in that aspect. So 7 key lessons, and I think you should just take note of it. Is that concentration is a double edge. What concentration means is that just staying in one particular thing. Why people will say I'm investing in Nvidia or I'm investing in Apple or I'm investing in Dangote, I'm staying in one. It's not like the very best. Try as much as possible to diversify because when things that are not so good happen to that particular thing, it will affect everybody. So try as much as possible to diversify. That diversification will help you. The other thing is that cash is still a valid asset. Very true. Right? This is extremely true. So I try as much as possible to have money at hand for investment. I don't just put all the money into investment. And the reason is because um, everybody know cash is king. So money at hand will help you to look at other opportunities than money in the market, right? So once you have money, and when I mean money at hand, I don't mean that you should put it in your savings account or something. What I mean is already in the market, but it's not invested. So most of this application, there's a way they do it, and then you can put money in your wallet, and when you want to invest in it, then you can use that money to invest, right? Or another thing you could do is to invest in treasury bills, all those money market instruments that within 3 months you can get your return, and when there's an opportunity in the market, you can then use it to buy the market. For example, when the stock market dip happened around April and things drop from that April to like December, most of the stock went up about 100%. I think what I was explaining is in one of our calls, most of the stock went up about 100%. Or, so it doesn't make sense at that point where that panic you can purchase things and then you can go up back, which is what. And then another thing is, which is lesson that I've learned, is buying is easy. I can tell you this: buying is the easiest thing, selling is difficult. Like knowing when to sell a knowing when to sell an investment is much more difficult than even buying the investment, right? Because you don't know if it will go up more or if it drop, all those things, so it can be tricky. This is another lesson I learned. So at that point, what your best bet is, get a dividend paying stock, right? So even if you don't sell it, they'll keep paying you dividend every quarter, and which does make sense. The next lesson I learned is commodities matters. And why I put it as lesson is because these things are very vital, very key. You have to use it as like an approach and then begin to make smart investment decision with it. Commodity matter. So what it means is that gold. Okay, let me just quickly talk about that. What it means is that in terms of commodity, gold is going to is still going to have a good year next year, and the reason is because there's still uncertainty. Um, there's still uncertainty. Let me put it that way, and also because we still have Donald Trump. So as much as we still have Donald Trump, I'm going to assure you, the guy is not going to rest until he disrupt the market. He can just wake up and then try to do stuff, right? So there will be some level of uncertainty next year in that aspect. And when there's uncertainty, that's when all this commodity really do well. Silver is not going to do so well, and now it's not because I hate silver. Of course, I do not. And the reason why I say it's not going to do so well is that he has there is what we call gold silver ratio, and gold silver ratio is what investors use as a criteria to know if silver is cheap or gold is cheap, right? And basically we have about 68 to 1, right? Beginning of the year it was around 128 to 1, so which makes silver to be very cheap, but now it has meet up, so it's not that cheap again. So you want to look out for it. If you want to buy something that is a bit cheap now, is crude oil. Right, is quite cheap, and you can get ETFs that is tracking crude oil on app like Bamboo. Yeah, Bamboo. I'm quite sure Bamboo has it. Even if you want to get ETF that is tracking silver, which is how you purchase silver, you can get it on apps like Bamboo. The same thing with gold, you can get it on apps like Bamboo. Um, so I've mentioned this to, like, don't time the market, don't try to act like my friend that says, oh, if we purchase, if we just look for when things go down, you purchase it at that, and when it goes up you sell it. Don't be like him. It does not always happen. Most time than not, people go in the peak. People that say, oh, we want to buy at the bottom, at the end they go in the peak and sell when it's bottom. They do the reverse psychology because it's the market. You never can tell what will happen. The part I wanted to mention, so opportunities for next year, there are quite a lot of opportunity for next year. But one major one, especially this January, kind of one major one will be construction companies, right? And basically because there is allocation every year, there's allocation. We are still expecting our president to share things about the allocation, especially for road and all those things. So there's a lot of allocation for construction company during this year. Um, there's an allocation already, like even for I think Berger, Julius Berger. So definitely is going to go up in the beginning of the year. There's Dangote, there's Boas, all these guys going to do well in the beginning of the year. We don't know what will happen later in the year, right? So they are more like opportunity. So think opportunity like not certainty. There's no certainty here, but it's more like, oh, this is much more. This is thing that is likely to happen, but you have to do your consideration and see if it is true or if it's not, and then you can purchase it. So, but company like Dangote, Boa Cement, they are going to do well. If it's banking, there are two companies in the bank sector that I think they are really very low in terms of they are quite cheap to buy, and that's Zenith and Access Bank. At this point, they are quite cheap. If you purchase them, you are going to enjoy at least for next year, right? Provided that all economic situation sit as it is. Don't forget in investing in stock market, macroeconomics beats microeconomics. So what does it mean? The things that affect the nation as a whole is much more important than the things that affect individual company. So because at the end, what affect the country will definitely affect the company. But what affect the company might not necessarily affect the country. I don't know if it makes sense. So you want to look out for how the whole Nigeria play out, but it's not within your control. So what is within your control is your consistency, your discipline, all those things are the one within your control. But what happens in the economy is not so much within your control. So there's nothing you can do about it, at least. Only if you have access to maybe the president, then you can tell him to do it. Anyway, so for the financials, I've mentioned that utility and energy, Transcorp and Cornell are two companies too that I'm kind of looking into. So you another thing you might want to do, you might just pick some of them and then purchase them and then look at how they unfold. Another commodity, one commodity that I mentioned that is something to look out for. And when I mention crude oil as something to buy, I don't necessarily mean that it will give you great return next year. That let's be clear about that, because to be honest, nobody know when the Arab country will tweak the demand and the supply, but I know it's definitely going to happen. It might not be next year, it might be upper year kind of, but it will happen. There will be opportunity for crude oil to go back, to bounce back. Definitely have to be. Um, for the global market, you already know my stand. For the global market, TSEM, Taiwan Semiconductor, is going to do well. Google is going to do well. Micron is going to do well. I didn't put Nvidia here because I don't see Nvidia. It's not like Nvidia is not going to do well, but I don't see it doing the extreme like he has done in the past 5 years. So that's why I didn't put it. But these are the ones that I feel they still have a long way to go in really performing. Um, Now, for someone that is very low risk, one thing that you want to look out for is treasury bills, money market instrument like treasury bills. This year it started from 22%, now it's around 17% or maybe lower. So next year you want to even purchase it just to be able to diversify more, so you don't just stay in equity or stay in commodity, but you want to make sure you diversify into equity, commodity, and money market instruments. So those three. So if you know you are someone that you don't like risk, you can put like 50% of your money into money market instrument like treasury bill. And if you are someone that then you can put like 30% in equity and 20% in commodity or maybe real estate or something. And you feel like you are someone that love risk so much, then you can put your money into equity, maybe 70% in equity, about 20% in money market instrument, and maybe 10% in crude oil. But you just have to find a perfect figure for you and then balance it depending on the risk tolerance. The question I always ask people is that if all the money goes, like if you lose the whole money today, will it affect you? If you affect your emotional state, then don't put all your money in equity. You can put like 30% in equity. Put it in more that will give you much more value in terms of your confidence and your tolerance. Said something here that how your 2026 will turn out will be determined by your financial discipline, investment choices, and consistency. And these are the factors you can control. Any other factor like the economy, you can't control. What the government will do, you cannot control. We can get to January and then our naira crash or something happen, or anything can happen, right? Because as much as the economic situation is concerned, anything can happen. And you don't just want to lie to yourself and say, oh, it's not true, blah, blah, blah. We have a good year. Of course, we are all praying for a good year. But one thing that happens in the financial system is that someone somewhere is interested in things crashing than in things amplifying. And another person somewhere is interested in things amplifying. So there are just opportunity in different market situation or different economic situation. You just have to look for it and make the best out of it. What for us, we can't control most of it, at least at this stage, we can't control most of it. But what we can control is how we react to things. You can control that. And that's what I want you to do. So in the coming year, look at things that you can control and then consistently build an investment towards it.